here in the United States, three of the most popular investment custodians are Charles Schwab, Fidelity, and Vanguard. And as a fee-only financial advisor for over 20 years, I've worked closely with all three of these custodians, as well as about a dozen others. And in today's video, I'm going to share with you my thought process as to what the strengths and weaknesses are of each of these, and when one custodian might be right for one type of person, but not for the other. So tune in. I want you to see this so that you can make the choice that's right for you. And I want to start by saying about 6 months ago, I did a survey on my channel on YouTube and asked people what their favorite custodians were. The actual question is, which one do you trust the most and which one do you use? And frankly, I was surprised. The one that came in the lowest was the one I thought would come in first. And interestingly, the survey results have changed over time. At this point, there's been over 2,000 votes. And originally, Vanguard was the clear winner, the most popular. And now it's kind of neck and neck with Vanguard and Fidelity, with Fidelity just squeaking out the win. Okay, so let's start in the order of their popularity. Fidelity. I think, Fidelity is best known, or really made a name for itself 30, 40, 50 years ago with mutual funds, and had a lot of success with some mutual funds. There's a famous investor, Peter Lynch, who ran the Magellan Fund that did very, very well for a little over a decade, maybe 15 years, had really stellar returns. And so Magellan was a powerhouse and in many ways really built the Fidelity brand here in the United States. Now, interestingly, Fidelity is still privately held. It's owned by the Johnson family. And that does impact the way that Fidelity is run. In my opinion, oftentimes companies are run by business people, and sometimes they're run by finance people, and then sometimes they're run by the legal department. And in Fidelity's case, because it is closely held, I think the legal department has a lot more power at Fidelity than it does in other similar organizations. And I think part of that is, just making sure that they're protecting this enormously valuable asset for the Johnson family. So one of the things with Fidelity is I have noticed that sometimes they change their mind on what types of forms and how you need to do things, where you might have to fill things out twice, even though originally they said, fill out this form and you'll be fine. That could change down the road. Now, it's important for me to say that as a fee-only financial advisor, I'm working with the institutional team at Fidelity, not the retail team. And I also want to say that Fidelity does a really strong job. They do a great job, but part of this video is to kind of tease out the differences. So that's an important difference that I want to share. Is, in my opinion, Fidelity's legal department has more say than in the other two departments, and how that may influence you is you may be asked sometimes to fill out a new form, or terms of service might change more commonly. Things that you'd expect if lawyers were running a company, that extra hoops you might have to jump through. But I do want to stress solid custodian. They do great work. Okay, Vanguard. Vanguard was initially the winner, and I thought, okay, well, this is the Jack Bogle crowd. Jack Bogle is the founder of Vanguard. And Jack Bogle's dream and vision was, how do we squeeze as much cost out of the investment process as possible so that the retail investor has as good of a chance to win as possible? Now, that was Jack's vision. Unfortunately, Jack passed away several years ago, but truly a legend in the industry. And now Vanguard has expanded its services into some areas that offer higher profitability for them. So yes, they're still the low-cost leader, but I'm not sure that just complete commitment to being the low-cost provider is there. So it used to be that they were noticeably less expensive, and now I'd say between Schwab, Fidelity, and Vanguard, they're very similar. And what I will say is I would not make a decision between the three of those based on fees. I think the fees are close enough. I suspect, depending on which category it is, Vanguard may be the low-cost leader on some of them. Certainly Fidelity is going to be the low-cost leader on others, and Schwab will be the low-cost leader on other services, right? So it just depends, but probably for the full package, Vanguard's going to be a little less expensive. But what you want is you want great service, you want to be making good decisions, and you want the support that you need from your service provider. So being the low-cost leader, I would say when you're dealing with your life savings, is not how to make the decision. I want you to make the decision on other factors, which we'll talk about here pretty soon. Okay, the next one is Schwab. And Charles Schwab, it's named Schwab because it's named after Charles Schwab. They would say that they were a champion for the retail investor as well, and I would agree with that. You know, when I started in the industry, the average cost for a trade was, I believe it was about $60. I think it was $59, but it might have actually been $99. So to do a stock trade, you'd have to pay at least $99. And then that went down to $59 if I started at 99. And then it went down to the 59, then it went down to the 39, then it went down to $9.99, then it went down to $5, and Schwab is actually the one that came in and said, we're going to do zero cost trades. Now, trust me, there's still ways that Schwab and the other custodians are making money, but they gave up the money that they were making from the trades. And they made it up in other ways. One of the ways all these custodians make money is on the cash that you hold in their accounts. That tends to be one of their most profitable line items, is if you're holding cash, because they can pay you a much lower interest rate than they can in turn invest it in short-term high quality investments. So that tends to be a profit center. In fact, Schwab was one of the early movers in what's called a robo-advisor. So there'd be an algorithm instead of an investment manager. Obviously, I hate the idea of robo-advisors. When it comes to your life savings. Maybe when you're saving your first $100,000, a robo-advisor makes sense. But do you really want to trust your life's work, your life savings to a robot, to an algorithm? Weird things happen, and sometimes sometimes when investment programs are envisioned, they don't think about these one-off cases. There was the flash crash several years ago where the market dropped pretty quickly, like 1,000 points. And it was a big drop, and all kinds of weird trades took place there. It was a glitch in the system. Some trader did something that they weren't supposed to do, and it caused a cascading event. But long story short, there tends to be unusual things that happen that maybe an algorithm doesn't fully capture all of those things. So getting back to the robo-advisor, Schwab was one of the first, but Schwab does require you to hold a certain amount of cash in their robo-advisor platform, even if you want to be 100% equities. And why do they do that? They do it because that's one of the ways that they make money. Those are the main differences that I see high level between the three custodians. Again, they all three do a great job. So how would I make a decision between those three? You know, one would be, is there a local branch near me? Schwab, Fidelity, can you drive down the street? Is there a place within a half hour that you can go down and talk to a human or drop off a check if you need to for something like that? So first one is there a branch near me? And again, I think these three all do great work. So that would be a criteria. The other is if you happen to be able to get an advisor assigned to you, what do you think of that advisor? What's their background? What's their educational background? How long have they been in the industry? Things like that. Who you get assigned to is important too. So that's more important than the logo that's behind their name. Some other differences that I'll mention. I mentioned earlier, Fidelity tends to have more leanings towards legal things, but one of the things they're really, really good at is educational articles, educational material that's all free. In fact, you don't have to be a Fidelity client to receive it. You've seen some of the Fidelity materials. It's so good. I talk about it here on my channel, so I think Fidelity does a great job there. Schwab, I kind of vibe with Schwab to put my cards on the table. The people that I interact with there, I feel like they're a good match. I think They do a good job on service. Now, from a service standpoint, 1 year maybe Schwab is better and Fidelity might be a smidge below, and then the next year it goes like this. So those things can change, but right now I think Schwab's got a small leg up on the service side. I think Fidelity's got a small leg up on the educating of their consumers, and I think that educating consumers is super, super important. So we talked about who will work with you. If you're super cost sensitive, I would encourage you not to be super cost sensitive, that the difference between these three don't make a difference. But if you are, I think Vanguard's likely going to be your low cost leader. And so that's it. I hope you enjoyed this video. I also want you to think about watching this video up here, where I talk about 5 reasons to retire as soon as you can. You've worked hard for your money. I want to see you not just grow it with a custodian, but I want to see you enjoy it. And that's what this video is about. I'll see you in there. Bye-bye.